if you get too clever about the rules, you can forget the rules and then you can't get in because you've forgotten how it was working.
Well, I assume that also works for if you pass away. Right? Inheritance has been a huge problem, obviously, for Bitcoin.
Well, I mean, I think it'll be fine if the government's just got out of the way.
It's still terrifying. Do you still find it scary ever?
You know, to fix the money, fix the world, bit cliche, but I think it's actually a positive incentive ground for all levels of human organization.
The path from the creation of Bitcoin to widespread global adoption has been fast, furious, and unexpected. For those other than Adam Back, who was there from the very beginning in the chat rooms, talking to Satoshi Nakamoto and helping to create the asset that we all love so much. This was the first time that I've ever had the opportunity to speak with Adam, and luckily I had the opportunity to speak with him in person in the Arch Public Lounge in Las Vegas at Bitcoin 2025. We talked about the entire history of Bitcoin, whether what we're seeing now was able to be anticipated, whether it's a surprise to him, but more importantly, how he sees Bitcoin becoming the global reserve asset into the future. This is a conversation with a legend that you cannot miss.
Let's go.
Did you ever think in the early days of Bitcoin that you'd be in Las Vegas at the Venetian Casino with 50,000 people for a Bitcoin conference?
No, it's getting pretty big, right? I think I went to the Bitcoin conference the first year after COVID in Miami, and that was pretty huge. People were just basically pleased that COVID was over and they wanted to blow off steam. So, but this is even bigger.
But I mean, being there from the very, very beginning.
Well, right. I mean, the first one I went to was, I think, in San Jose, and it was like a ghost town compared to this. So, like, you know, very few people. Yeah.
Well, it's obviously indicative of how far Bitcoin has come.
Right.
Did you believe that it would actually get to this point?
Well, I mean, in the sort of 2013 era, Bitcoin felt riskier. Like, you know, people will look at other people that bought Bitcoin earlier and say you were lucky. But it felt super high risk, right? So there was a time that Bitcoin fell, it ran all the way up to $1,300, and then it fell towards 200. People were starting to get scared. It dropped below 200 and thought it's all over. Like, it's going to zero, they got scared, right? So people feel things in the moment. So yeah, I think this kind of level of user interest, the institutional interest, the price level, all these things were things that people, you know, were unsure would happen or thought would happen decades into the future. And it's happened a lot sooner than we would have guessed, I think.
So reading the early chats and the conversations around the creation of Bitcoin in the early days, obviously there was a strong libertarian tendencies. It was F the government and, you know, opt out of the system. Now, we're to some degree cheering institutional adoption and governments becoming involved. Is that part of the natural trajectory of Bitcoin reaching its full potential, or is there a bit of cognitive dissonance in celebrating to some degree the things that it was created to rally against?
Well, I mean, I think it'll be fine if the government's just got out of the way. And so, you know, in a sense, the current administration is more than that. They are trying to bring Bitcoin-related businesses to the US. So they're sort of undoing some of the friction and getting us to where we might have been otherwise. So that's positive. Yeah, I mean, I think you saw something similar with the early internet. You know, it's like counterculture, ability for people to create their own blogs, their own media channels and things. And the governments didn't like that originally because they were used to being able to influence like government, broadcasting corporations and things like that. But ultimately, you know, internet stocks were very investable to traditional investors. So I think that, you know, people don't necessarily have to be like philosophically interested in something to want to invest because they can see millions of other people are. But one thing that I'd say is positively surprising is that, you know, if you go back a few years, people will be worried about, will institutions dilute the ethos? You know, will the institution invest dilute the ethos? And I think what we're seeing is that the ethos is contagious and it scales. So, now you see politicians and like they clearly really get Bitcoin, they're into it, maybe they're all in. Of course, it varies, but you can see also in El Salvador, when that first started, people weren't sure, was that, will that stick? Did somebody do some Bitcoin development down there to try and do biz dev, right? But it seems that actually it was homegrown, like the Bukeles actually were Bitcoiners and got it for themselves. So, the concept that these different types of people in different roles of responsibility can get enamored by Bitcoin and bring it into their realm is surprising. So, Bitcoin went from hobbyists and, like the cast of The Matrix, basically. That was the kind of early feel, right? The people that were not having a good time in the establishment world, who weren't sure they liked the establishment world, would opt into Bitcoin early. And now, the cost is much bigger, right? But it's actually bringing that new cast of people into the philosophy and understanding and value of self-sovereignty and hard money, re-examining, time preferences and what money is ultimately.
It does seem like even the biggest institutions and names, at least largely understand the original ethos. We've talked about this multiple times, but the fact that Larry Fink is on TV saying that Bitcoin could become the global reserve currency because of the United States debt,
Yeah, I mean,
it's just blows my mind.
I mean, it's actually a good example because, he's not just selling, he understands it and he's coming to believe it over time, right? So that's not something that you would necessarily expect. You would expect that people would want to sell what the customers wanted. That's the Jamie Dimon, JP Morgan is like begrudgingly, oh, you can buy Bitcoin if you insist kind of thing, right? So that's selling because people want it, but Larry Fink is actually, presumably personally invested as well.
Is there any situation with this level of adoption that does concern you? Governments becoming too involved, hoarding too much of the supply, becoming miners and potentially controlling a meaningful percentage of the hash rate?
Well, I mean, there are some more levels to go in terms of seeing how well the Bitcoin incentive scales. It's scaled really far and it seems to work so far. The incentives are holding together. It's enabling bigger companies, bigger entities, public companies, governments to participate so far. So indications are that can continue to be the case and basically wholesome, dependable money incentives are beneficial for the economy and for society, it seems. So, I mean, I would say that I'm not necessarily in a rush for governments to buy strategic reserves because it's better for the individual to be able to buy Bitcoin, and eventually it will become more expensive. And if a few big governments get into the game, they might start to get into a competitive game theory where they have to compete with each other. So famously, Hal Finney, I think this was the second day after the Bitcoin network started, so you can find a post on a mailing list, 10th of January, I think it is, where he's saying, maybe the addressable market for Bitcoin should be about 200 trillion. And that looked crazy at the time because, there's a ghost town, there were no transactions, no users, certainly no price for a few years. But it's starting to look more realistic. We are about 10 times away, 9 times away from the price of gold, from market cap, and another 10 times from these kind of 200 trillion type of market cap situations. So, it is getting into the later stage, but you can still see from the conversations with the institutional interest that it's early. So they're asking intelligent questions, they've been researching it, but they feel like 2015 questions, just in terms of uncertainty about things that anybody who's been in Bitcoin for a while is like, oh no, that's not something to worry about. Like, let me explain it to you, right? So they're catching up. I think the institutional adoption, while there've been a lot of announcements, they take a while to enact. Like they have to write the policies, they have to write the guidance, they have to train their advisors.
They have to clear the lawyers.
Yeah, so there's a lot. So I think all that stuff takes time, so we haven't felt the force of it yet. And somebody did an analysis of the BlackRock filings, and from the people who filed their ownership of the IBIT, I think about 33% was institutions, but that's a small percentage for institutional allocation still.
Being there from the very beginning, you talked about these massive drawdowns, 1,300 back to under 200, it's over. I think I started in 2016, so as you said, I'm jealous of the 13 guys who are jealous of the 2010 guys. But was there ever a moment where you deeply questioned whether it was going to survive or whether you actually wanted to be a part of it? Did you ever lose your conviction?
No. I mean, I'm of the viewpoint that if you want self-sovereignty, you have to take it, which is a kind of cypherpunk attitude, right? We'll just build it being privacy technology or previous attempts to build electronic cash. And if people use it, that will gradually change regulations and attitudes, right? So I think, it's not for us to self-moderate in adopting Bitcoin or privacy technology. So no hesitation on that front. Of course, everybody has a kind of roller coaster experience participating with the Bitcoin market. So it's not without its kind of drama and scares, different bands and roller coaster market effects. It takes some getting used to. And I think in some ways, the Bitcoin investors are kind of survivors, right? Because it's very difficult to trade and invest with this kind of volatility for a typical person. And I think many people who end up owning Bitcoin they're not necessarily somebody who's been trading stocks like on a personal basis or professionally before, and that's already in a kind of emotional roller coaster. Dealing with stocks and the volatility is like 10 times less or less than that, right? So it's definitely a kind of aggressive learning curve for volatility. And so effectively the people who stay in Bitcoin are either stubborn, they don't want to realize a loss, or they're just a value investor inherently, they just keep buying. But that's where the HODL meme comes from, right? That selling Bitcoin is typically very dangerous because the price can run out of reach and then you're kind of trapped with buying it back higher or out of the market, which happens to people as well.
Of the early people that were deeply involved, how many do you think sold on that 1,300 move? I've talked to quite a lot of them who said, I sold at 1,000. It was unimaginable that something that I'd basically gotten for free went to $1,000. It was wealth that I never could have conceived of having.
Well, I was a bit later, so I haven't talked to that crowd, but I have seen many people have some kind of mistake story or regret story, right? They bought something like a router or something, which for what is now a lot of Bitcoin, or they sold at the wrong time. Yeah, the pizzas are pretty phenomenal. Just kind of market learning stories, right?
Yes, so many people have found creative ways. Have you ever had a custody issue or some mistake where you look back and say, I can't believe? Have you ever lost any Bitcoin?
No,
I certainly have.
I had a near miss. I found a wallet on a laptop, and it had been there for a little while. I think this was around the forks where people were trying to split the forks. So I was rummaging around trying to split anything I had to convert the forks into Bitcoin. And I found this wallet, and you could see how much Bitcoin was in it. It wasn't a huge amount, but would have been annoying. And I didn't know the password. So it's like a Bitcoin Core kind of QT wallet. So I tried to remember a few passwords, and after a few tries, I got it. So I was like, okay, still didn't lose. But it is a little bit, personal management of key backups is like a risky thing. Got to be very methodical and not forget what you did as well.
Where do you think we are in the evolution of self-custody being accessible to everyone? Because obviously in the early days, even for me in 2016, it was self-custody. You can't trust the exchanges. You saw hacks, all these problems, which you still see. But obviously the exchanges have worked exceptionally hard to add some sort of security features, and self-custody is still terrifying to a lot of people. So where are we sort of on the evolution of self-custody being accessible to everyone? Or do you think that actually most people will end up with a custodian or an exchange?
Well, I mean, I think it's, I think the ETF's the accessibility thing, right? It makes it easier for more people to get access. Some people, the way that they interact with savings and investments is they call their broker or their advisor. So the ETFs give them a way to do that. But it does give them an on-ramp, right? They can learn about Bitcoin, then they can buy a hardware wallet, they can do some storage, kind of grow it over time. So it's a kind of safe starting point, I guess. And I think ultimately, as long as a decent proportion of Bitcoin is in activist investors' hands, they will guard the ethos, if you like. And ultimately, different custodians and ETFs are, they have an obligation to their shareholders or the unit holders of the ETF. And if they do something on a policy basis that users don't like, they can sell it and move to another one. And so you have a kind of implicit market threat that if they don't do what their users expect them to do, they'll lose their assets under management, right? So I think that's a kind of balancing force. I think it is getting a bit easier. This wallet I had was a little bit older, so it was before the 24 or 12 word seeds. So if you didn't keep backing it up, you could lose that way too. It's like an extra twist. Yeah, so I think user interfaces have improved, and the hardware wallet, the fireproof safes, I think, there have been cases with the wildfires in Southern California where people's house burnt down, and I believe there are a few cases of Bitcoin being lost in that, which is very sad, obviously. Yeah.
So where do you stand then for your average person who's just starting, whether they should take that deep dive to self-custody, whether they're ready for it from the very beginning, or is that just sort of the natural progression of going down the rabbit hole?
I think it depends, on your technical experience level. If you're like IT, you understand that kind of stuff. I think it's always good to try the experience, at least with a bit, to have some self-custody coins, and then you can change it over time.
It's still terrifying. Do you still find it scary ever?
I mean, it is a crazy thing, right? That you can store these words on a steel plate, and this is, savings. And the same technology works for $10 or $10,000, right? So it can, and the price changes too. That's the other phenomenon, right? People take some kind of lax, didn't care that much about care when they were setting it up, and the price goes up 100 times. And now it's, it went from a small investment to most of their savings or something, right? So that can make people nervous too.
Years ago, I interviewed Jameson Lopp, and that was his pitch. He said, you gotta think about what you're custodying right now as worth 100 times more than it is right now. That was literally how he would sort of pitch multi-sig to people.
Right, I mean, I think the other thing people should do is not talk about how much Bitcoin they have. There are I think some of the French kidnapping things were basically as a result of talking a lot about Bitcoin on primetime TV, actually, right? So that's a bad idea. And, people will think, oh, it's not much today, but maybe it'll become more in the future, right?
Well, I'm not even going to ask then what you do to secure your assets or what kind of approaches you take towards security. Maybe let's talk a bit about Blockstream. Obviously, CEO, founder, deeply involved for years. How do you now evolve with this new landscape in Bitcoin as you're building a company that's providing services in the space?
Yeah, so, I mean, we've had the green wallet for many years, so we're evolving that, making it easier to use, deeper integration with a hardware wallet and hardware wallets from other manufacturers. And Jade hardware wallet line is also cross-compatible on other wallets. So if we have a desktop version which has got a bit more features for small businesses, so we're kind of expanding that to suit a wider range of business uses. So, the typical thing you have in a business is that multiple people might have to sign off on something. So there's a kind of workflow for approving payments and things like that, where the hardware and the software can help you manage that. So that's one direction. Another direction we've taken. Now, Blockstream's focus is basically to try to solve whatever problems arise around Bitcoin. So it looks like a collection of things that we're doing, but it's all like things that got in the way of Bitcoin reaching its next step or next use case. That's why we got into asset management and recruited Sean Bill, who is a hedge fund manager, but also the manager of a US pension fund, the first one to put Bitcoin on the balance sheet in 2021. And he's a Bitcoiner. He was trading Bitcoin some years before that, right? So, and that is to sort of help the pension funds and the endowments and the sovereigns get into Bitcoin because they're very cautious. And it's complicated for those institutions, which Sean found out by being the CIO of one of them. Even if you can get approval, which itself was very complicated from the management teams, it's difficult to find an asset manager that you can allocate to that can pass the process that will enable them to invest. And it's all about risk management, audit, a lot of factors that this type of investors need to see that an individual doesn't concern themselves with typically, right? So and the shortage there is really to help them get involved with Bitcoin and to address some of the shortage of US dollars that you see in the Bitcoin space, right? So you see that, if you borrow against Bitcoin, the interest rate's really high. It's because of a shortage of dollars. If you trade with margin, the margin costs are sky high. It's all because of a huge shortage of dollars in the Bitcoin ecosystem, and that's because, traditional investors don't understand the risks, and so they just stay away. And so the dollars that are in there are from other Bitcoiners, basically. And so, the interest rate's going to be high because they're going to be looking at their lending and get twitchy and want to buy Bitcoin with it. So they need a high interest rate to even keep lending, right? So it's a shortage of dollars, but there are people in pension funds and endowments with large amounts of dollars that they're content to collect a medium interest rate on if the risk is right. Bitcoin is actually a very good collateral asset to lend against because it's highly liquid. So it's actually very safe for the lender. And if you keep the LTVs low, also a reasonable trade-off for the borrower, especially if the interest rates come down a bit.
So if Blockstream's job or mission is effectively to remove friction around Bitcoin and solve problems, what are the biggest problems right now that need to be solved?
I think there's still some usability problems and sort of safety from user error problems around hardware wallets and backing up Bitcoin. And there are things you can do with that. So Blockstream Green Wallet was the first wallet to have multi-sig, and it has a kind of time lock where you can have two factors to get into it, like a two-factor authentication device and a key and potentially another backup key. And so it had already back then, some years ago, some kind of time lock feature where, if you lose the two-factor authentication and a backup for it, you can just wait a while and you can get in anyway, because it doesn't, you can sort of bypass it after a period of time has elapsed, or you can use another offline key to recover the wallet. So there'll be like one key in a wallet, one key from two-factor authentication, and one you have offline. And if you lose your two-factor authentication, then you can recover it yourself. So there are ways to make it safer for people to back up. I think another way to do that would be to set it up so that over time, it can fail over to a custodian that you pre-designate or something, right? So, you have self-custody. If you fail a bit, you can get back in. If the user does what users sometimes do, and they lose the backups, they lose the phone, they forget everything about it, then okay, you want to have a backup plan to the backup.
Well, I assume that also works for if you pass away, right? Inheritance has been a huge problem, obviously, for Bitcoin.
Right, and there are a few wallets that are specializing in this, using many scripts, like sort of being able to write more custom contracts and having wallets that are able to respond to customized payment policies, and also managing the complexity, because one of the risks you get is if you get too clever about the rules, you can forget the rules and then you can't get in because you've forgotten how it was working, right? So it's important that the wallets, the backup includes all the instructions. So with Bitcoin now you have this descriptor wallet, which includes a coding of how it's supposed to organize, and some of the recent miniscript and PSP2 technical mechanisms that wallets can automatically answer more complicated storage setups without being hard-coded for it.
We obviously keep talking about the early days, but now, has anything changed for you in your mind of how you would pitch Bitcoin to a new person? To someone who doesn't own Bitcoin yet, maybe hasn't even ever heard of it, is it the same pitch you would have given in 2011 or 2012, self-sovereignty and the same values, or are there different reasons now, different sort of arguments you would give to compel somebody?
I mean, one of the nice things about coming to in-person conferences is talking to new Bitcoiners, and it's down the same kind of interest and focus as 5 years ago. I think one thing that may get people in the door, as it were, a little faster is that if you go back on YouTube for very early financial news segments where somebody's talking about Bitcoin, is at that time they would be it'd be looked at like a joke, this funny internet money. Can you guys tell us what this curious hobby you have is, right? And the person explaining it would be apologetic, it might work. It's not maybe that crazy,
A lot of caveats.
Yeah, so they'd be on the defensive, right? But now I think it's turned around so that the newscaster is being apologetic about not understanding it. And that's because a lot of people's assumption about what could work or what's safe is from peer pressure. And they see BlackRock, they see Fidelity, they see it on the financial news, they see the ticker scrolling by on Bloomberg. They just assume it must be good, right? And therefore it's, they start from a position of trust rather than a position of disbelief. So I think that kind of adoption level helps, and it helps individuals, but it also helps institutions because they have to, persuade their committee or whatever that's doing their risk management that they're not crazy. And, as Sean found out in 2019 with the pension fund, they thought he was crazy to start with, right? And I think that would be a slightly easier conversation now because you've got more, you've got the spot ETFs, you've got more financial institutions that have made announcements about providing Bitcoin products. So there's a lot of safety in numbers, as it were.
That, I think, was the biggest switch with the ETF, is that I think if you walked into a room as a CFO or a fiduciary, you had this reputational risk for even mentioning Bitcoin. Mm-hmm. Now I think you have reputational risk if you can't answer questions about Bitcoin. And that's why even the Jamie Dimons and the JP Morgans reluctantly come on board, because his clients are calling and you have to have an answer.
Yeah. Well, I think that actually BlackRock went a little bit further. So, they have the ETF, but they also came out with a position paper recommending, I think it's a 2% allocation to general diversified funds, which is a big thing. Sort of software systems and IT integration, there's a saying that you never get fired for hiring IBM, because IBM's like a big reputable supplier and system integrator. In the finance world, you don't get fired for copying BlackRock or using BlackRock products, right? So their support now with Larry Fink and this kind of recommendation, it's going to help other people do it. But having talked with pension fund managers and endowment managers and asset managers that provide service in that space, they're still fairly early. They're asking intelligent questions, but they feel like 2015 questions in terms of, what about this risk and that risk that the market basically sold, getting on for a decade ago, actually, right? So they're catching up, but it still feels new to them because whether something's new is like a perspective, right? If you're new to it. So I think it's still early, ultimately, because you see very, economically savvy people are still a little confused about how to think about it, how to value it. That's one question, for example. What's the valuation model? They can value a stock.
What's the P&L?
Yeah, but what should it be worth? Could it fall? Should I buy it now? Should I wait? All these questions, right?
Well, that's one of the ones that drives me nuts. No intrinsic value. That's been one of the dumbest forms of FUD, I think, that we've seen repeated throughout time.
Yeah, well, I think Bitcoin is basically competing for the monetary premium in all the things. So if you back out the M2 monetary expansion in the major stock indexes, they've basically flatlined since COVID.
Adjust for inflation, yeah.
So then, basically, your hurdle rate, trying to defend your savings from inflation, should be that monetary inflation. So I think basically what's happening slowly is people are realizing that Bitcoin is the hurdle rate. If you're not outperforming Bitcoin, you're wasting your time, right? Now you got to look at it like a 4-year duration or something, because it's volatile, but the volatility's been falling. And I think that's where the treasury companies come in also, because they've found, by trial and error and by learning as they go, starting with Saylor, that you can achieve a return above Bitcoin, which is you operate a company, you put its reserves in Bitcoin and use the free cash flow to buy more Bitcoin. You start to command a premium because you've got a return on capital, and then you use that, with convertible notes and bonds and at the market share selling to increase the Bitcoin per share. So, people will ask, is that sustainable? Is it scalable? And I think it is, because it's just another form of net present value, your sort of kind of arbitrage on the future, as you were, right? And as scalability, I think, going back to how Finney's data, market cap, addressable market, that is the size of the arbitrage, right? It's a couple of $100 trillion, so it's very scalable. It doesn't matter if Berkshire Hathaway, Microsoft, Apple pour their entire cash reserves into it. That gap is not going away overnight, whoever.
Having been literally through every single cycle and through every up and down, do you think that we will continue to see sort of the predictable halving cycles and the crazy ups and downs and volatility of price action? Or do you think that since we are still early on this institutional bid and sovereign adoption, do you think that perhaps the volatility will be dampened into the future? And that could be to the upside or the downside.
Yeah, apparently Bitcoin's volatility has a fat tail, which means that the volatility is biased to the upside, which is a good kind of volatility. Mm-hmm. compared to stock, general stock indexes and things. But it's still, the volatility is going down slowly, but it's still like somewhat volatile. We saw the drawback in the last few months was I think about 35%, which is kind of relatively normal for a bull market. In prior bull markets, you've seen like half a dozen drops like that. I think part of the reason is like market structure. So if most of the people historically that own Bitcoin have ended up all in, or they're at their threshold, right? And so if the price falls, they desperately want to buy more, but they've got no money, right? No fiat left. That makes it hard for them to defend a price pullback, right? Whereas with stocks, there are analyst reports about all the companies. If they think, Microsoft is undervalued, they'll sell some Dell and buy some Microsoft or what have you, right? So there's capital that's just getting reallocated, and that sort of keeps the drawdowns reasonable. So I think as you get Bitcoin ETFs, that helps because I think the money that's going into ETFs on the retail side is mostly top 10% of wealth, excluding the top 1%. So, just people with a portfolio, professionals like a dentist, a doctor, a business person, somebody with a family business, somebody with a portfolio, and they're basically, the money they're putting in is not today's income. So they call their broker or their advisor and they say, I want to buy some Bitcoin. And the question is, well, what do you want to sell? So, they sell something else, sell some stocks or what have you. So if they see it going down, they could sell some more of that thing and buy more Bitcoin if they feel like it. And they're also good investors, what Warren Buffett would call a good investor, which is somebody who holds, might buy more if the price falls, and is not, going to panic sell if it drops 5% the next day, for example.
They might not even know that it did. Is my argument is they might look every 3 months, every 6 months, and rebalance.
Yeah, and I think that's the other thing, on the BlackRock 2% allocation. So Sean Bill had a similar kind of pitch to the Santa Clara VTA pension when he's proposing Bitcoin there, is that they should put that allocation in and not rebalance it specifically. So a lot of these professionally managed funds are rebalancing the good performers to try and sort of optimize returns. But for Bitcoin, if your strategy is to buy a small allocation, you've got to let it ride. You can't rebalance that every quarter, right? Because you'll give away the upside every quarter, right? So yeah, the small allocation, long-term conviction play is important. I think generally people who are buying ETFs are not day trading them, right? Yeah. They're putting them there in their portfolio and leaving it for a few, 3 years or something like that.
So I know we've got to run in a second. I just want to ask you, in context of everything happening now, what's the most exciting to you? What still gets you, out of bed and ready to work in the morning about Bitcoin?
Well, I think it's just the scope of Bitcoin to improve the world. It's a disruptive technology, and the self-sovereignty seems to be contagious and scalable through different levels of organizations. So, to fix the money, fix the world, a bit cliche, but I think it's actually a positive incentive ground for all levels of human organization, and so far it's scaled really well. So now, and I think, it's as I said, competing for the monetary premium in stocks, bonds, real estate, so this monetary premium is actually not healthy because it makes the normal use of that asset expensive and hard to get at. So people are, unable to buy housing, or they can't get the housing because there are people storing empty apartment units as a form of saving, right? So, putting that into Bitcoin is better. And then the other question people will ask when they get bored on Bitcoin talk from time to time is if Bitcoin gets full adoption, so hyper-Bitcoinization's happened, would you reallocate or would you hold Bitcoin? And I think the answer is you would be very happy to hold Bitcoin because this small percentage of a basis point that you could hold is going to continue to hold that basis point of this store of value addressable market going forwards, despite population growth, productivity growth, and so on. So it becomes the kind of risk-free return that preserves savings, and it means that you don't have to take on risk to to try and chase like preserving your spending power. So that's actually a very positive thing. So today people have to, take on a lot of risk just to try and preserve their spending power. And with the amount of quantitative easing that's happened since COVID, it's probable, in my opinion, that we'll have financial repression for a decade or more, where basically the inflation rate is way above the official government interest rates. And so that means you're going to suffer asset price inflation.
Thank you so much for your time, Adam. It's really an honor to finally get the chance to sit down with you.
Yeah, thanks.
This incredible conversation was recorded live in the Arch Public Lounge at Bitcoin Las Vegas. To dollar cost average into Bitcoin efficiently and to check out all the other algorithms, go to archpublic.com.
That's dope.